Do you want the opportunity to invest in the fastest growing international companies while still being conscious of what countries you're supporting? And do you want to help incentivize countries becoming freer just by investing? Then let me introduce you to FRDM, the Freedom 100 Emerging Markets ETF. Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. It's no secret on my channel that I believe there's a lot of value outside the US in international markets. You can check out my video on Japan to get a deeper dive into the US versus international markets. However, for this video, I want to introduce you to the Freedom 100 Emerging Markets ETF, more commonly known by its ticker FRDM. This ETF tracks the Life and Liberty Freedom 100 Index. First, let's take a look at what this particular ETF is. Out of the three types of markets, developed, emerging, and frontier, FRDM is focusing on the emerging markets. Countries like the US, Denmark, the UK, and Australia are all developed markets where income is high, currency is stable, and liquidity and assets is also high, and it's also very easy to invest in. Emerging markets, though, are just a step below this. They are often countries that are transitioning from a low-income, less developed, often pre-industrial economy towards a modern industrial economy with a higher standard of living. Lastly, frontier markets are even less developed countries, but we'll talk about those another day. Often regarded as the authority on defining markets, MSCI releases a yearly report that shows which countries belong where. Currently, MSCI classifies 28 countries as emerging markets. The list is on screen. Now let's take a look back at our Freedom Index, FRDM. This index measures what are defined as the metrics for freedom, which you can see here. Since it will take a while, I won't go over each aspect, but you can see that the metrics cover civil, political, and economic freedoms. The Fraser Institute, the Cato Institute, and the Friedreich Naumann Institute provide all of the data, which is then tallied together and generates a composite score. The worst human rights offenders like China, Russia, and Saudi Arabia are excluded. Then, according to these scores, the top 10 freest countries become larger parts of the ETF, even though all 26 countries are included. The Freedom Fund holds 100 stocks, with 10 companies from each of the freest emerging market countries, with some exceptions of course. However, companies where the state or government controls 20% or more of the entity's operations are excluded entirely from the index. Currently, Taiwan, South Korea, and Chile stand at the top 3 countries in the Freedom ETF. While we'll look at the individual holdings of the fund in a little bit, I think it's right to first examine the ideas behind the Freedom Fund. Of course, FRDM's most outspoken advocate is its founder, Perth Tolle. The idea behind the fund first came around when Tolle lived in China and befriended a woman who didn't legally exist. Because of China's one-child policy at the time, the woman's brother was the only legally recognized child in her family. It was at that point that Tolle realized that political governance and freedom really matter, and posits the idea that freedom is what allows emerging markets to further evolve into fully developed markets. Ultimately, Tolle's idea led to the creation of the Life and Liberty Indexes in 2014, then to the launching of the Freedom ETF in 2019, the subject of our video. Yet, what about performance? While there really isn't much data to go on, FRDM is relatively new. As of this video, it's only been around for 2 years. While researching, I wasn't able to find any definitive long-term studies measuring the correlation between countries becoming freer and the actual development of the nation. Although you can check out the link in the description for an interesting paper from Bruegel, a Germany-based economic think tank examining how a country becoming freer can aid in its economic development. The main points of the paper include the idea that with a liberal democratic government comes checks and balances that limit the power of the government interfering with businesses. As democracies rise, with them comes more transparency of government actions and the ability to effectively curb corruption. Along with this, the provision of civil liberties leads to more individual economic freedom, which has been linked to higher literacy rates, lower infant mortality, and longer life expectancy. The last point I want to make from the paper is that authoritarian countries are often less open to the rest of the world. This can lead to these countries essentially being left unchecked. We saw an example of just how bad this can be just a few weeks ago with China. Jack Ma was forced into hiding when China prevented the largest privately held fintech company, Ant Financial, from launching its IPO. Another example came when China forced the Chinese version of Uber, Didi, from the App Store, resulting in a 40% drop in its valuation just days after Didi launched its own IPO. Just 2 weeks ago, at the time of recording, China threatened to seize its entire for-profit education system into state ownership, leading to massive declines in companies like New Oriental Education and Tolle Education Group. Overall, these authoritarian actions have led to unease for investors wanting exposure to Chinese markets, because you never know what company China will destroy next. Personally, I believe that countries becoming freer have economies destined to improve. The combination of economic and individual freedoms allows the market to also be free. I also believe that freer markets are more efficient and in the long run benefit all parties involved, investors included. It's part of those personal beliefs that I like the Freedom ETF so much. It allows me to invest in emerging markets without exposure and support to more authoritarian countries like China. Even though Freedom only has 2 years behind it, the ETF has a solid track record. Overall, it's up around 35% or 17% every year compounded. Of course, this isn't proof of the concept working, but I'm excited to see where it goes from here. With all that being said, let's actually look at the ETF's holdings to see what you're getting should you invest. Like I said earlier, FRDM is the top 10 largest and most liquid companies from the freest countries in the world as measured by 76 individual criteria. The top 10 companies are weighted in the index by market capitalization. This is from the fact sheet off the ETF's website. As you can see, Taiwan occupies the largest piece of the pie at 20%. South Korea, Chile, Poland, and South Africa all follow. Looking at the actual company holdings of the ETF, remember these countries are market cap weighted. We see at the top, of course, the expected Taiwan Semiconductor, Samsung, and the Central Bank of Asia, a Taiwanese bank. Fourth is a personal favorite of mine, the Bank of Poland. In the future, I want to make a video on Poland and why I like it so much, but for now, I just think it's worth a mention. However, I strongly encourage you to look through all the holdings for yourself to get a better idea of what you're getting with this ETF. For now, I will leave it there. There are 3 big things that I want you to consider if you want to invest in FRDM though. 1. Emerging markets are volatile. Emerging markets are usually in small countries with weaker currencies and have yet to prove themselves on the broader market. Yet this shouldn't necessarily scare you from investing. I think it's important to have exposure to emerging markets as they have some of the largest growth opportunities. Take a look at these 2 charts from Van Eck. The first is the relative PE ratios of emerging versus the S&P 500 versus the Russell 2000 versus the MSCI World Index. Next is the price to book value of the same comparison. As you can see from both these graphs, there is a compelling case for emerging markets being severely undervalued versus developed markets, at least for now. 2. The sector weighting of the ETF. The holdings are extremely overweight in just a few sectors, technology and finance. These 2 sectors have been some of the best performers over the last few years too, and might have skewed the ETF's performance. They make up 50% of the fund's holdings. Essentially, FRDM is a freedom-weighted tech and finance ETF. Personally, I really like this because my portfolio is underweight in these sectors. Of course, you may be different from me, so it's definitely something to consider. As you can see, tech and finance dominate, with materials, consumer cyclical, and non-cyclical taking up basically the rest of the holdings. And 3. The very idea of the fund itself. While the Freedom Weighting Index makes a lot of sense to me, it's still an untested idea at its core. There is significant evidence to support its core foundation that freer countries do better economically in the 2 years of freedom's existence. It's still a risk to keep in mind. Full disclosure, I do own this ETF. In fact, this ETF makes up not only all of my emerging markets exposure, but a good percentage of my international exposure. Like I've said several times, I believe in the fund, its story, and its core ideas about freedom in the market. I did the research and came to my own conclusions about FRDM, and then I made this video to share my thoughts about it. Emerging markets display so much potential, and countries that value personal and economic freedom should be rewarded with investment. And FRDM gives me the ability without supporting authoritarian, human rights offending countries. Honestly, I think this fund shows real promise and hope new Life and Liberty Index funds will be created following its example. As always, I hope you enjoyed this video on the Freedom ETF. Leave your thoughts on this ETF in the comments down below or join my Discord and have a conversation. With all that said, I will see all of you in the next episode of Dollars and Cents.